Hey everybody, it's Norris with the Norris Group. It is December 21st. It's a Thursday. We're going to be closed tomorrow all the way through January 2nd, so we're doing this a little bit earlier. The blog will be down while we're taking a break, but the radio show will be up. But for this week, what are some of the biggest trends for rehabs coming up in the year ahead? That as we cover the biggest headlines in real estate. Up on the radio show and podcast, we have the final and the second interview with Tom Wilson when Tom talks to us about his properties he works with and what states, his highest cash flowing product, what happened when he decided to shift company models, and the toughest thing about doing syndications. Following that, while we're on break, we're going to start interviews with Matt McFarland and Amanda Hahn with Keystone CPA, talking about the revised tax plan put up by the Trump administration, assuming as of today it's going to be signed as is, so we're actually recording it in just about 20 minutes. So look forward to that, not this weekend, but the following weekend, and the weekend after that we'll dive in to see what it means for real estate investors in 2018. Builder confidence continues to increase. Housing starts on single-family homes increased 3.3% in November. Mortgage credit risk increased year over year in the third quarter by 18 points, now stands at 111.1, up from 93.1, so more creative risk products are being introduced into the market. No surprise there. The National Association of Home Builders reported builder confidence increased 5 points to 74 this month, and the National Association of Realtors reported a 5.6% increase in existing home sales in November, their fastest pace in 10 years. Zillow Home Trends forecast is telling us all white kitchens are so out in 2017. So what as real estate investors should we be focused on in 2018? Floral prints with bold contrasting colors, statement floors, bold colored geometric tiles and light colored hardwood floors, light wood cabinets and matte metal hardware will be all the rage, and lastly, warm natural colors for walls, including warm reds and caramel browns. I don't know if I'm ready for red. We'll see. All white kitchens, bar carts, and succulents are so 2017, so don't be caught dead in 2018 making those mistakes. Realtor.com also released a list of home renovations that can help you recoup the cost of installing the upgrades, as well as helping your home sell a little faster. Smart home features like smart thermostats, refrigerators and locking systems, finished basements, patios, walk-in closets, granite countertops, eat-in kitchens, hardwood floors, laundry rooms, open kitchen concepts, front porches, dining rooms, Energy Star appliances, 2-car garages, fireplaces, and security systems, and infinity pools and wine rooms. While they're really cool, they're also very expensive and very far down on the list. Make sure you pay attention to your specific area because those features can sometimes change. A survey done by the National Association of Realtors says that more and more people would like to live in places that are walkable, close to restaurants, stores, and work. The two biggest groups driving the trend is actually the older generations and the youngest demographics. So those born before 1944, the silent generation, and those born after 1981 are millennials. The millennials state that being able to walk or having kids walk to school is most attractive, while the silent generation feels that these communities afford them the ability to stay connected as they give up driving. So interesting, it's being driven by the outskirts of the population. However, in the middle, you've got Generation X that's just loving the suburban lifestyle. Perhaps it's because they've got kids and they want a little more space for those kids to run around in. So they're holding on to those big floor plans and huge yards, but will be interesting to see how the millennials and silent generation continue to shape urban and suburban cores. Both Fannie Mae and Freddie Mac announced their plan to confront the growing U.S. affordable housing crisis, and we've been talking about this a lot. If we don't solve it at the local level, the government will. So Freddie Mac announced their plans to develop a new renovation mortgage product to help rehabilitate aging stock, increase liquidity for manufactured housing loan originators by purchasing loans titled as real property and personal property. And they're also going to support energy efficiency initiatives and shared equity programs, which help preserve home affordability. Fannie Mae listed 3 new targets for them. They're going to be focusing on manufactured housing, affordable housing preservation, and rural housing, supporting the financing for targeted high-needs rural regions and populations. So both of them taking a bite of that affordability script that's going around. It'll be interesting to see how they do that, and especially with financing, and to see if investors are going to be part of that plan. Zillow's press release this week says the share of adults living with roommates is higher than ever before. As rents across the country rise, many working adults are doubling up with roommates or parents in order to cut costs and share living expenses. With the increase in rents, 30% of working adults are living this way to save money, up 8% points from 2000. Los Angeles, Riverside, and Miami have the greatest share of adults living with a roommate or parents. So it's very strange strange that Riverside, California made that list because we're not exactly a high dollar amount area. I could understand San Diego, Orange County, so how we ended up on this list is very strange. These metros also have some of the nation's most expensive rents, and that's another reason why I think Riverside is weird. But anyway, Americans making the national median income should expect to spend about 30% of their monthly income on rental payment, but in Los Angeles, renters spend almost 50%. Let's end the year with some good news. According to Fannie Mae, the economy is expected to end 2017 on a cheerful note. Their latest economic and housing outlook this month is showing the economic growth forecast increased 1/10 from the previous forecast to 2.5%. Both consumer demand and investment spending are expected to improve this quarter. Business equipment investment in particular grew at its fastest pace in 3 years in the third quarter. Doug Duncan, of course, he's been on I Survive Real Estate panel and on the radio show several times, says the economy appears poised to finish 2017 on a cheerful note as fundamentals increasingly align with strong business and consumer sentiment. Domestic demand is building momentum, job growth is solid and broad-based, and consumer spending looks likely to strengthen. So 2017 is almost behind us. What would you love to see in 2018? I would love to hear your comments on things you'd like to see us cover on the radio show, or perhaps on our blog and our videos, or maybe something you want to learn. So leave a comment, let me know what you think. If you're on YouTube, please leave a comment below, and don't forget to like the video and subscribe to the channel so you don't miss a beat. If you're on Facebook, please don't forget to not only like the Norris Group page, but don't forget to add us to your See First list and with notifications on. Leave your comments below the video. And if we missed something, share the story on our comment sections on either YouTube or Facebook, and we'll make sure to include it on our blog at thenorrisgroup.com/blog. We have an extremely busy speaking schedule coming up in January, and we start January 2nd out of the gate in Los Angeles with Cashing Out or Stay Put. This is our new talk that we launched in San Diego to rave reviews. So we're very excited to see you all over Southern California, starting in Los Angeles with Prosperity Through Real Estate on January 2nd, right after the first of the year. January 9th will be in CV RIA at the Coachella Valley RIA out there. The 10th, the very next day, we'll be back in Los Angeles in the Glendale area with Robert Hall and Associates. They have an all-day expo, so we're just a piece of that. So you have an opportunity to see a lot of different people, so we're excited to see you back in LA just a week after the first time on the 2nd, and then January 11th we'll be at OC RIA doing that very same chat, so there's a chance to catch us in almost every single major county in Southern California, and don't worry, we'll be back in Northern California in March for NorCal RIA. For more information on hard money loans, including fix and flip, buy and hold, and new construction starting at just 6.9%, check out thenorrisgroup.com. We will be releasing information in January, most likely, for loans starting in Florida, and we're very excited to do that starting in January or February. A little later than we had hoped, but we're getting there. Had to get some stuff set up. For more information on passive investing with trust deeds, whole note investing, check out tngtrustdeeds.com. With that, Merry Christmas, Happy New Year. We will see you on the other side in 2018. Thank you for all your support in our 20th year of business, and we will look forward to working with you next year.